Welcome to TradeTheMBA.com. This is John. This reports for the 24th of March. And, market's moving pretty much consistent with our expectations here. We've had the rising white, but magenta leading. So that's indication that, bulls are trying to push through. They just haven't quite overcome the power of the shorts. But what we were looking for is magenta staying above that 25 level, and it's doing that fairly decent. We got a nice little tight spider here of bulls to shorts. That is usually a pretty good sign for short cover rally within that. And if we can get magenta that takes over MBI white here, then you're really looking towards moving towards the 58.90 range and more, because that will definitely blow past any of the supports there. Or resistances in this case. From a NASDAQ standpoint, you can already see same situation. This time the magenta's already cleared it. And this has been the weaker party to both of them. And so move for the NASDAQ being strong would overdo it. And of course, I'm going to relate this to the fact that now they're realizing that the tariffs that are coming are more targeted. Yeah. Pretty much like we talked about, that they were going to overplay their hand on it. They would be wrong, but they would get a crowd moving in a certain direction, and that is all it takes. Then you can trade against them. And you need that extra liquidity to really have a big position against the crowd. From a Treasury standpoint, nothing happening here. The Fed has just pretty much said, no, we expect inflation to go through the roof, and we're not going to do a thing, which also leaves things artificially high. And I mean, Trump's not wrong in asking that, rates be modestly lower to help individuals. But of course, the narrative on that would be, well, that's just helping people with equities and owning things. It's always the double-edged sword, because no matter what you do to help people at the lower end of the rung are always going to benefit the people at the higher end. Is causality. From an oil standpoint, still not good. There's nothing you're getting here that's helpful in any way, shape, or form, and that's going to continue to be the lag. And as long as it remains this way, fine. You're not getting any acceleration in inflation at this particular stage. In fact, you're probably having somewhat of a diminished effect in certain areas, but not across the board, and it's certainly not leading to any kind of deflation in pricing. So all the problems that existed before still, they're still there. The euro is still riding high, despite the fact that they're talking about spending trillions of dollars in new debt and trying to figure out how to shift the numbers so it doesn't look like that's what they're doing. But that's what they're doing. So that's going to keep gold elevated, even in this modest little sell setup here. Even a retrace to 76 would not be that big a deal within it, but complete reset of short-term buyers, and that they're just waiting for the next wave, any punch in oil pricing or failure on the peace front. Any of those things would be enough to start to drive it. Bitcoin finally catching up on this build up here, just pretty much been straight across after the decline, and it's got some strength within these readings. This should be able to propel it. Just got to get that shakeout back to a positive. Get rising gold, that's enough to help the momentum on it, but it's still got to get to the plus side. If you don't, you're just going to hit up against the 50, and even if you may not even make it to the 50, may only be to the 38% line right here. So it's got more to do from that standpoint. And the big lagger here, ETH, is just not getting anything done. When we look at it from the intraday standpoint, so we started off the day with beautiful MBI white lead. So we suggested that the zero would be our projected move, and that's exactly what happened. But once we get to the zero, magenta took over, and that started to lead the punch back up. Then you started getting some back and forth white MBI, and that's a perfect setup for bulls short cover rally that will just squeeze them hard. And sure enough, it started building in there, and then all of a sudden the MBI white spiked again, but the magenta came back strong right before the breakout, and that breakout has just devastated shorts completely. And you can see the pop up, and now we're breaking out past the range into new highs. So it puts it right there, and that's exactly how to view how that short cover rally works and why it takes place. Sometimes it's not just good enough to have the signal of it, but that shows you why the imbalance that was created. And then you had late shorts adding into a situation that was already not going quite in their way as that volume was being sucked up. From an intraday standpoint, you can see we had that early morning decline, which, that's an open gap down situation, and that just beautiful from an options play. So it wiped that out. That left nothing but calls. And then, of course, later on for the next week, starting to build towards the inner part of the day, buy for their call setup for the beginning of the week. And all those that bought those calls for the beginning of the week are very happy they did so. Contrarian play to the psychology that was the current theme, as everyone was selling this firestorm of decay for no good reason. The economy, everything from that standpoint is broadly fine. There's going to be fits and spurts in different sector areas, but overall, things are still just limping along, I think is the best way to describe it. That's the long and the short of it for now. As always, anything relevant, I'll put in the Skype chat for you. Have a good one. Trade well.